just based on that picture that I posted up of the daily chart, if you look at the daily chart here, and let me go back to it. So look at this daily chart, right? Okay, if we just start to kind of analyze what's been happening with the market. And again, if you guys are not really kind of doing top-down analysis on a day-to-day, week-to-week basis, you're probably doing more harm to yourself than good, right? So just to kind of clear things up, a lot of people want specific strategies or levels for that specific day or specific time frame. But there's a much bigger picture going on outside of, the first 5 minutes of the day. There's a much bigger picture going on than what's happening on a 1 minute candlestick, right? So how many times have you put yourself in a situation where you enter into a trade, you get in, and the trade looks great, pulls back on you, right? And it's kind of like, why did it do that, right? So where are you realistically at in terms of the bigger picture? So if we look at the bigger picture here, these highs that we put in, right? These highs go all the way back to August the 13th, 24,068. Now, once we put in that high, there was one thing here that stood out to me. It was this inverse hammer, this doji, shooting star candle, whatever you want to call it. I just call it a pause candle. If you kind of look at that 8/13 candle, right? August the 13th, look at that candle. It's not the strongest of a close, and then that kind of, started to spell out this 1, 2, 3, 4, 5, 6, about 7 days worth of pullback. Now, the pullback was significant because it pulled back not just anywhere, it pulled back into our daily 50 SMA. So technical analysis 101, this is the way that I was taught, okay? And again, I'm going back 12 years. I still kind of trade the same way. There's been some new, things that I incorporate just to kind of try to protect myself or better in terms of position sizing and stuff like that. But the overall thesis, like the overall theory, I guess I should say, on how I trade hasn't changed, right? So I trade price action based on supply and demand. Very, very simple, right? Now, inside of supply and demand, you're always going to have different chart patterns. You're going to have different levels. You're going to have different moving averages, VWAP. There's all sorts of different things, right? 15-minute orb, 30-minute orb. For me, I've always kind of told people, I don't really care how you trade. I don't care what indicators you use. Doesn't really matter. What this breaks down to is supply and demand. Where are the buyers? Where are the sellers? Whatever terminology you want to put onto it, whatever verbiage you want to put onto the way you're trading is fine by me. It doesn't really matter. This is a marketplace. Where are the sellers? Where are the buyers? Let's try to get in with the sellers. Let's try to get in with the buyers. So when you look at where we pulled back into a 50 period moving average, the daily 50 SMA, which is our buyers. That's acting as support. So if we're trading over that, that's going to be your demand zone, right? So again, I'm not going to make this too lengthy, but if you notice this chart, when we pulled back, 2-3 days here into this daily 50, we kind of bounced. When we bounced, we failed to put in a new high. So anytime you fail to put in a new high, you have to start thinking two sides of the trade. If we fail to put in a new high, right? This right here on August the 28th, when we failed to put in, and continue to run and put in that new high and we started to pull back again, where was this pullback on the 2nd of September? Right back into the same spot. So now we have a very clear and definitive line in the sand. Again, the market is choppy. The market is kind of going up, going back down, going back up, because just look at where we are at. We are not breaking out. We are not breaking down. We are trapped. Price action is consolidating in between this daily 50 moving average and this daily 20, right? And then you have your little intermediate supply zones here, which is the 5 and 10 day moving average. But realistically, between 23,605 and 23,100, which is a 500 point range. Okay, it seems big, but it's not that big. The 500 point range can sway the market up and sway it right back down, can sway the market down and right back up. So immediately in times like this, I go into a mindset of, okay, if I understand based on the bigger, higher time frame, that the market's not going higher, it's not going lower. It's going up and down, but there's a big difference between going higher and lower. If the market's not going higher right now or going lower, and it's pretty much just going sideways, what do I need to do to kind of protect myself on the back end here? So since I am a day trader, since I am a scalper, first things first is if I identify on a smaller time frame, an intraday time frame, a potential long setup, I'm not going to put 100% trust into that setup. Does it mean don't take the setup? No. But what it means is if I get into a long setup, understanding that I'm still below supply, if I get green, I got to get out, right? And that can be anything between 5 points. It could be 10 points. It could be 15 points. That is going to come with the level of experience and more screen time and what's comfortable for you based on the position size that you're trading. Not every trade, regardless of whatever strategy or level that you're playing, is going to be the same. And I wish that it was, and I wish that I can sit here and tell you guys that, hey, you know what? If you know, if you see XYZ, I'll just use a 20 SMA as an example, right? Because all you guys are familiar with it. If every time you guys get a 20 SMA setup, I just say, hey, you know what? Every time you get it, you can put on a 10-point stop loss and a 10-point take profit, and it's going to hit it 85% of the times. Wouldn't we all be multimillionaires, right? We would all be multimillionaires. We would just manage our risk. We know that we're going to win 70% of the trades, and all we have to do is wait for those setups. And truth be told, market doesn't play out that way, right? And it's not just a 20 SMA strategy. It's not just a 15-minute orb strategy. It's not just using supply and demand. It could be anything, fair value gaps, whatever it is that you guys want to trade. No trade strategy is always going to play out the same each and every single time, right? So there is a little bit of expertise in terms of emotional control and screen time and experience that plays a big factor to this overall trading stuff. When you want to put trading inside of a box and you want to assume that, hey, why did the market not work today? Why did the 30-minute opening range break not work today? Yesterday I took it, I waited for it to break, I took the confirmation when we continued, it worked. Today I did the same thing and it didn't work. You're trying to put trading inside of a box. And when you try to put trading inside of a box, it becomes extremely more difficult because you're constantly seeking to find a solution that you're never going to find. Now, we already know you're going to win trades, you're going to lose trades. It's how we manage those losing trades. Obviously, we don't want to do nothing stupid. So there's a few things that we can do right off the top that's not going to make us go completely crazy and off the rails. It's, we're not going to go put on 10 mini contracts, right? We're just not going to do that. You don't have enough drawdown to do it, especially if you're trading prop firms. And you're not going to, take a million trades a day, right? Like you're not going to sit here for 8 hours and trade. You're not going to trade all 3 sessions, right? Just because the market's open 23 hours a day doesn't mean you're going to make money 23 hours a day. So there's a few things that you can do, obviously, that are common sense to help avoid bigger losses and getting stuck and stuff like that. 1 second, guys. 1 second. One second. So there's some things that you can do right off the bat. Now, as you get some more experience and as you start getting a little bit better at reading the charts and you have a better feel for the market, you're going to gain that confidence more naturally to, when you see things set up in the market, fire and execute, right? If you still find yourself at a point where you have a lot of doubt and a lot of like, well, maybe I need to see a little bit more confirmation. Well, I don't really trust this all too well. You have to see exactly why you're not trusting that particular entry or setup all too well. Because I'm going to tell you, and like, again, if you fail to understand this, you're going to have a tough time. So it's just better to swallow what I'm about to tell you and then just accept it and move on. You're never going to be 100% confident in any entry. You're just not. Right? Even when you feel that you're 100% dead confident, the trade that could still not work out, right? So why are we going to put ourselves through the stress and the pain of trying to be picture perfect when you're never going to be picture perfect? It's about a series of trades that makes the trader. It's about a series of trades over the course of 30 days, over the course of a quarter, that's going to make up the bulk of your P&L. It's not today. It's not this one trade. It's not the first opening drive trade that you took today. That's not it. Okay. So a lot of times we get stuck in the now, right? As day traders, we're hyper focused on right now. Right now, I need to make $3,000 and I need to pass this evaluation. Right now, I just lost $500 and how am I going to get it back? Right now, I took one amazing trade and I made $1,000. Great, I can just do that every single day and make 30,000. You're so focused in the now, you're not really thinking 30 days down the road, 60 days down the road, 90 days down the road. Again, think about it. If every 3 months you have a new quarter, right? Investors, firms, even earnings reports for these big Fortune 500 companies, they're working off of quarters, right? So it has nothing to do. You have a down day today, that's fine. But you don't want to put yourself in so much of a down day today that you can't recover this quarter, right? That's all we're trying to do, is we're trying to be better than last quarter. And are we going to do that every single time? No, you're going to have some flat quarters, you're going to have some red quarters, but all in all, over the course of a year, did we win more quarters than we lost? And if you do, you're going to be profitable. There's no way around that math. It's math, right? So with that being said, if we kind of look at where we're at right now with this NASDAQ 100, I'm expecting it to be choppy. I'm expecting us to get to the high of day, sweep and pull back. I'm expecting that. Why? Because we're trapped below a bigger macro supply. So if I know that, maybe I don't really want to be taking every high of day breakout today, right? Just like if we pull back and we're testing, a low of day or a previous hour low, maybe it's not the best time to jump in and go short. Why? Because we're still on a higher time frame in this range, and that's probably where buyers are going to be stepping in. So right now, during this battle between the buyers and sellers, bulls and bears, you're going to have a lot of traps, and the newer inexperienced trader can't understand that, and they don't want to realize that, right? So we got to be breaking out, right? We're fine. This is the third attempt at high of day, so this is going to be the one that goes, right? Well, no, just understand where you're at on the bigger time frame. Maybe you want to just let it sweep the high of day, let it pull back, find some support, and then you get long off the support, right? That's less risk for yourself. So that's going to come over time. And I really love using the big chart, because the big chart kind of gives me a clear picture, right? If we're just sitting back right now and you're kind of looking at my screen, yeah, it looks like there's a lot going on. Especially if it's the first time you're ever looking at all this jazz on my chart. But to me, it's very simple. It's, yes, we're pushing up right now. Do we have a little bit more room to push up? Sure. 23,600. I can see, that's another 50, 60 points away from here. If there's some slight pullbacks on a small time frame, can I get in and try to capture, 5, 10, 15 points into some anticipation that we do touch 600? Sure. Right. On a downwards move, I don't really see nothing too concrete until we were to probably lose the low of day today, right? If you were to get below today's low of day, then sure, you've got some room to 23,314, right? Now, that's a long ways away. And can I sit here and say that there's not going to be a smaller opportunity to take a short? Of course not. Of course, if you go down to, like, let's say a 5-minute time frame, that chart's going to look a lot more different. In this particular example, we might have a little bit more downside room below 23,482. But if you look at that, we're still about 50 points away from that, right? So even being 50 points away from that 482 level, I'm not too interested in taking a short here. Now, the market can continue to pull back into 520, 515, 505. There's no space there. So, a lot of times you can tell yourself, well, we ran into supply, I can get short, but you're kind of just, again, for the lack of a better term, you're just gambling, right? You're just assuming that we're going to back test support before we break out of supply. What would you say that that's a concrete setup? That's a concrete level? Probably not, right? But do people do it? Have I done it before? Do you do it? Absolutely, right? But the thing is if you find yourself putting on those trades where you're looking at this chart on a 5-minute time frame and you're telling yourself, well, we haven't pushed up through the high of day, you know, I'm going to use this high of day as a potential stop loss, and I'm going to short this down into demand. You cannot be upset or question why it didn't work, why the short didn't work. You already know going into this why the short's not going to work. The same thing for the long. You can decide to get long here. This can come all the way down to 500, which is 40 points down, and then it can bounce from there. So you can't really get upset about why the long didn't work. In order for this to kind of have some expansion, you're going to need to see that higher time frame, the daily chart. You're going to need to see that start to open up and expand. Until that opens up and expands and we start to clear out supply or demand on that daily time frame, you're really not going to have any room here on these short intraday time frames. Now, that I don't want people to get confused with, that means you can't take a long or take a short today. That's not what it means. You just need to understand where we're at for today's price action and understand where we're at for today's range. And you need to kind of make some minor adjustments to help fit in line with what the price action is doing, right? So if you're normally looking for a 50-point take profit, do you really think today's a day to look for a 50-point take profit, right? You know, unless you got long down here on this sweep through the low of day at the 10 a.m. reversal, you probably don't have a lot of room. Like, you're just guessing, right, at that point. And I'm not in a real big business of trying to guess where the market's going. I just want to know that this particular trade that I'm going to take, it's going to have space or it doesn't. If it has space, great, we can put on some risk and we can allow this trade to work out and then follow a proper stop loss. If the trade doesn't have any space to work out, I don't really want any part of this trade. Now, looking at this 5-minute time frame here, what would I need to see in order for us to have space? Well, if I was to get long here, I got supply at 23,555. I've got to respect that, right? That's my linear regression line. The way I trade, the theory, the whole baseline to the way that I trade is supply to supply, demand to demand. So I need to clear and confirm a level of supply before I can trade that into the next area of supply. There's no sense in me getting long here right into supply. So what I would do in a situation like this is I would wait for this linear regression to get broken and then probably try to see if we consolidate or pull back. If we do, and that happens to play out that way, and then it confirms the break over this linear regression line, then I would get long. If you kind of notice, my Bollinger Bands are starting to curl downwards here on the top side, curl upwards here on the bottom side. That's typically letting you know that you're going to get a move. There's going to be some expansion here, right? There's going to be some expansion. So when you get that expansion, depending on what side of the range you're trading on is going to be the side of the trade you're going to want to be on. Now, being that we are trading towards the upper portion of this Bollinger Band, maybe we see that expansion to the top side, okay? I would expect going into lunchtime, if I just look left of the chart, what did we do pre-lunch? We kind of sold off a little bit, and then we had a slow grind back up to the high of day. So to me, that's telling me the market was kind of grinding up and to the right. During lunch, if you get a little bit of a pullback, I would accept that and look for a trade to the long side coming out of lunch. If we just continue to grind higher through lunch, then after lunch, I would look for a little bit of some type of supply rejection and a back test where you can catch a short, right? Again, wait for something to happen. Most people's problems will completely 100,000% be erased by just being more patient, by not trying to rush. And again, we all understand that. I understand that. You understand that. It's a lot harder to do than just telling yourself to do it, right? Because people don't want to, you know, they look at trading as it's a fast way to make money. And we all know that it's a fast way to make money. We could put on a trade and it could shoot up 25 points in our favor in 30 seconds, right? It's definitely a fast way to make money, but it's not every single trade you put on. It's not an everyday occurrence, right? So once you get over that, like those kind of like, you know, newbie jitters is what I call them. This stuff becomes extremely boring, right? Like every day, like if someone was to ask me, do I love trading? No, I don't. But it's a means and a way for me to pay my bills, and I've done it for, you know, better half of 10 years now. but it's not like I'm not excited to sit here and watch these candlesticks, right? Like, I don't know how old you guys are, but you know, this is like watching Atari. It's like the, you know, we're watching like a very old school video game here, and it's just basically up to us to just watch this thing ping pong back and forth until it breaks through one of our levels. So, you know, it's not the most exciting thing to do. It's like, I definitely don't get off of, you know, this is work for me. I don't get off of work and, you know, go down to the local bar and tell everyone how excited I am to, you know, be trading these charts. It's not that exciting, right? So once you get over that kind of feeling, you have to put yourself in that mindset of, yes, we don't work 9 to 5 when we trade, but this is a 9 to 5, right? Do your homework. Don't be an idiot, meaning do some analysis, some technical analysis each and every single day, whether you want to do it when the market's closed or you want to do it before you go to bed or whatever, or you want to do it, you know, an hour or 30 minutes before the market opens each and every single day. Make sure you're doing your homework top down. What is the daily chart looking like? What's the 4-hour? What's the 1-hour chart looking like? Great. Set kind of a soft bias, right? And not just have, like, here's the problem with people when they do top-down analysis. They create a bias and they stick to the bias. Oh, market's going to go short today. It looks like it's going to go short. Guess what? Market sweeps the short, goes long. They got no answer for the long, right? So when I say create a bias, create a lean, right? A lean, I'm leaning a little bit more short if this happens, but I understand that this is a two-sided market. What's my long, right? So make sure that you have both sides of the trade. That's why sometimes, I don't know if you guys have ever kind of picked it up, I will always say, guys, if the market does this, you know, we're looking for short, but if it does this, we're going higher. Well, no shit, D, right? The market's either going to go higher or go lower. Yeah, but you know what I'm doing for myself? I'm creating a two-sided trade. I'm completely comfortable for, if it does break that downside, cool, I can try my short, and if it does break some particular upside, I can try the long. I'm ready on both sides. It doesn't mean that I'm looking to, okay, market's a red candle, I got to go short. Nope, market's green candle, I got to go long. No. That's not what I'm talking about. There's bigger levels inside of this price action. Like all of this crap here since I would say about 7:30 Pacific Standard Time, there's been no short. It's just find a way to get long somewhere into supply. It doesn't mean that you should be long here, then you should be shorting here. Nope, we're going higher, you should be going long here. Oh, red candle here at 8:10 Pacific Standard Time, I've got to be short here. That's not what it means. What it means is once we broke through and reclaim this 20 SMA, reclaim this 50 SMA on a 5-minute time frame, we should have tried to find a way to stay long. Now, if you're not comfortable because it's at the top of the range, that's fine. Just understand that there has not been no short position here, right? So understanding that there's always two sides of the trade is definitely going to help you. And then just honestly, guys, just being patient, sitting on your stump, right? Get comfortable. I mean, that's why we have a community. You guys can, you know, shoot the shit with everyone else in the community. Don't feel like you just have to post gains, or don't feel like you just have to post the most recent trade that you took. You know, use it as a community, as a room to kind of pass the time until you see something. You know, if you want to throw out an idea on what you're waiting for and pass the time until then, great, right? But what I feel like a lot of traders do is they have eyes glued to these candlesticks and they're waiting to, you know, they want to fire, right? Where am I clicking this short? Great, market's just hit linear regression, I've got to be short now. You don't have to be short now. The only reason anyone was to click a button here and be short here is if they were 1,000% waiting for price action to touch this linear regression and they told themselves they were gonna get short here by using a stop loss just right outside that linear regression. That's the only way you're short. You're not going to catch that in real time. Does that make sense? So like if you have no plan to take a short at the linear regression, you can't just fictitiously make up, well, I've got to get short now. Should I go? The market's pulling back here and we touch the linear regression. Should I go short here? You're too late. Does that make sense? That's what happens when you have more experience, when you just get more screen time. And having more experience is not like a confidence thing. It's not like a you know, it's a hierarchy thing where, oh, well, you know, I've got all this experience. No, it has nothing to do with that. It has to do with you being around these markets long enough to where you're comfortable watching price action drift into a specific level and creating and populating that plan prior to that reality actually taking place. Does that make sense? So like, if someone was to say, well, we touched the linear regression, we're pulling back, can I go short here? I'm going to say you're too late, because you didn't have a plan. You're trying to create a plan while the plan is already in motion. Does that make sense? That should make a lot more sense. If you never had that plan to get short here at a potential double top, at a potential linear regression rejection, there's no short for you here. Like, you're now what you're doing is you are gambling. You're just chasing price around. And when you start chasing price around, it's like a turtle trying to catch a mouse. It's just never going to happen, right? Like, it's just never going to happen. So when you think about your trading, always put together two sides of the trade so you're ready for whatever the market wants to do, and then just sit back and let it play out. Like, I know people who take a dozen trades a day and they make some decent money. I know people who sit back and they kind of just wait for one trade every other day and they make some money. So it's about finding your style of how you want to trade. And the person who takes a dozen trades a day, sometimes that doesn't even make more money than the person who trades once or twice a week. It's just about finding your sweet spot and how you're going to, build and populate your plan, right? So with that being said, what would I be waiting for now? Like, to me personally, like, I want to get into a bigger time frame here, and I want to see something else, right? Looking at this 1 hour time frame, this candle on the previous hour candle here that just closed, it's not too promising to me. Like, the market's going to, immediately scream up right now through lunchtime, but it's a level that I would want to mark out, right? It's definitely a level that I want to mark out. So when I am on a smaller time frame, I'm kind of looking at that level and just kind of keeping that in mind. Now, if the market does pull back, it doesn't mean that it's a short. It's rising support, right? So rising support is at 23,511, and that support will continue to rise the longer we stay over 511. So technically speaking, there's a 40-point range here of, I don't want to do anything until we at least test support, or until we break out of 23,555. So what does that mean? It means that right now I have to be extremely patient and just kind of sit back and wait for one of those two things to happen, because I don't want to be a knucklehead and try to, anticipate that the market's going to touch support, right? How many times have we done that? Well, markets looks like it's pulling back now. If I get short here, I'm going to make so much money if it comes all the way down here to support. And then it just kind of stops midpoint and then just going to the long side. And then realistically, you're kind of thinking, well, I just got stopped out. If I would have just waited for it to actually break out or retest, I would have done better, right? So force the patience issue, force the boringness, force the, 9 to 5 mentality in terms of, you got to just get through the day, right? Your 9 to 5 should be very closed as well. So for me, it's market open till just about lunchtime or coming out of lunch. So technically, this hour, I'm going to be done trading. And I probably won't take any more trades today, because I don't want to risk losing what I've already made today. And again, for me, when you're trading prop firms, it's not about how much money can I make today? How many setups is the market going to give me today? It's about, how many freaking days do I need to log into these prop firms? And I've said it a million times in here before they actually want to pay me, right? What's the firm? If it's Top Step, I got to have 5 days over $150, right? If it's Apex, I got to make $2,600 and have at least 8 trading days, and make sure that, at least out of those 8 trading days, $50 was made. And then, as long as I hit all those numbers, whether it's 8 days or 10 days or 22 days or 35 days, it doesn't really matter. Every single day that you can just follow the rules. And again, I know we think that we're traders and we have no boss and there's no rules. Guys, we have rules, right? Let's if we didn't have any rules, it's be the absolute wild, wild west, and all of you guys would just be, sitting in a bed of money, with your coldest favorite drink in hand and big cigar in your mouth all day long, right? So it's not like, you have rules, you have a boss, you've got things that you need to stick to, right? I know that everyone wants the idea of, we just do whatever the hell we want and make us however much money we want to, but that's not really the case. So with that being said, just create a trade window for yourself. Like if I was going to tell somebody who's completely brand new to trading, what are some of the best things that you can do to try to help yourself become a consistent trader or a better trader? It's first things first. What asset are you going to trade? Okay, we want to study that asset. We want to get comfortable with the movement. For our, example here, we're going to use the NASDAQ. I'm going to trade the NASDAQ. I'm a NASDAQ trader. Okay, great. What session am I going to trade? Is it going to be New York? Is it going to be Asian, London? Okay. Well, I'm choosing New York. Okay. So we're going to trade the NASDAQ. We're going to trade New York. And two, what's our trade window? I'm not going to sit here from market open till market close, just hoping that the market kind of gives me something along the ways. That's completely preposterous. It's stupid because you're going to mentally burn yourself out. There's no way to self-sustain yourself over the long haul in doing that. And your results are going to vary because you're going to be getting a different price action movement, right? ATR is going to be different in the morning than it is at lunch. It's going to be different at lunch than it is coming out, and different during power hours. So get comfortable with the session that you're going to trade and the window that you're going to trade, right? You wonder why your results are varied and they're skewed. It's maybe because you're taking a handful of trades in the first 30 minutes and then you're sitting there 3 hours later taking a handful of trades during lunch, and you're wondering why the profits and the losses are different, right? Again, keep our eyes on 23,555. That's the previous hour highs here. So once you have those three things in order, what asset are you going to trade? What session are you going to trade? What's going to be your trade window? If it's going to be a 2-hour window, 3-hour window, 4-hour window, whatever the case may be. Once you have those three things in order, great. From there, I need 1 or 2 setups. And it doesn't have to be a model. It doesn't have to be a strategy. It doesn't have to be a specific anything. It's just when something, it could be a bear flag, it can be a bull flag, it can be the 30-minute opening range, it can be initial balance, it can be using linear regressions, it can be using the moving averages. It doesn't matter. Find 2 setups that you can identify 10 times out of 10 times if they present themselves. Like for me, I can identify them 1,000% of the time. A 20 SMA, yeah, of course, right? I use thinkorswim to chart. I plot on these green arrows and red arrows by just, clicking on the moving average, right? Again, clicking on the moving average, go to study, go to simple moving average 20, and then show breakout signals. Yes, I just click that and it's going to plot every time we close over under the 20 SMA. So can I identify when there's a 20 SMA setup 100% of the time? Absolutely. Whether I take the trade is a different story, but I can identify that setup. That would be the 4th thing I would tell someone to do. Find a couple strategies. Like, 30-minute opening range is great as well. It's take the high, take the low, and then how do you want to play it? Do you want to take the first break? Do you want to let it break and retest? Whatever. Once you have a setup that you can identify on a day in and day out basis, then you need to work in risk. Okay. Based on this, how much do I want to risk per trade per day, right? With that, it's going to be, well, what's your account size, right? If you're trading personal account, numbers are going to be different. If you're trading prop firms, well, I'll just use the example of a $50,000 account. $50,000 account, $2,500 worth of drawdown typically. I don't really want to risk any more than $250 a day until I build up a buffer. So $250 a day, how much can I actually trade? Well, it's not going to be 5 minis. I'll tell you that right now. Can't afford it, right? And I can't cry about that. Well, I want to trade 2 or 3 mini contracts like everyone else who makes $1 million a day. Sorry, bud. Like, you got to have a little bit more money to do that, right? A bigger cushion to do that. So, what is it? Is it 3 micros, 5 micros? Do you want to risk the entire $250, $300 on the day? Do you want to split that up between 2 or 3 trades? How do you want to do it, right? And that will get answered through basically how much points you're looking to take, right? Or how much points you're looking to give up is going to determine whether you need to risk the entire, $250, $300 on one trade, or you can kind of split that up. Like if you're scalping, I wouldn't risk $300 on a trade if you're scalping, right? Like I'd risk maybe 100, 125 bucks. Either you take the stop loss or you're allowed to take 3 trades. You're a scalper. If you're kind of looking for like a little bit of a bigger move where you want to be a one and done, two and done type of guy, girl, then, you know, maybe you risk 200 bucks on a trade. And you know, maybe you trade a little bit smaller size. Maybe if you're scalping, you trade a little bit of a heavier size and you have a tighter stop loss. Figure that out. And then here's the secret. Every day you just come and do the same shit. Win, lose, or draw. Every day. And I'll tell you this, it doesn't get any more exciting than that. But every day is the same shit. And that's where people get hung up. They think that they're going to get to some pinnacle where everything just clicks and it's like you never have emotions, you never lose, and everything changes. Nothing changes. It's the same way. Shit's the same as when you first started trading. Then, you know, you've been here doing it for 10 years. Nothing changes. You're still looking for the same things. You're still respecting your loss. You're still respecting your size and your risk based on your account size. And that's it. The only thing that changes on a day-to-day basis is these candlesticks sometimes decide to work with you or they decide to play games with you. That's it. How can you be upset about something that you can't control the outcome, right? So again, find 2 or 3 setups that you're comfortable identifying on a day-in-day out basis. What I think happens to a lot of people is they try to get too big for their bridges and they try to read price action all day long. Like, even if they have a 2 or 3 hour trade window, you're trying to read every exact move where it's going next versus just kind of waiting for your 2 or 3 setups that you'd like to trade and then just ignoring everything else. Like right now, I'm not really trying to decide if this market's going to pull back or it's going to shoot up like crazy. You know, I'll just wait for one of those 2 things to happen. Either you're going to shoot up and then I'm going to get that break over this high of day and then a pullback. That's what I'd like to see. And then I can decide to go long. But like, I think too many people are trying to decipher before the move is actually played out. And you're trying to be like, you're not a computer. You're not a robot. You have no idea where this is going. You're trying too hard to do too little. But anyways, that is what it is. So just wanted to kind of stop on here and see how you guys were doing. Kind of go over the price action. I mean, the plan that I have for tomorrow, again, I'm going off this daily chart. If you kind of look at this, I like this setup to the long side, right? I like this potential bull flag. And if we can get a closure over 23,600, oh, that's going to be sweet. Because now we can have a potential going back to August the 13th into tomorrow's the 5th. You know, we're talking about almost a 2 to 3 week potential pullback that is not a bad spot to pull back into, which is the 50 SMA, where we can see now a continuation breakout through these highs where we get a week to 2 weeks worth of just upside move, right? So I would like to see this breakout to the long side again. If it does close below the 50, there's no problems there. We're always ready for both sides of the trade, but this is setting up for a potential breakout. We just need to wait for it to happen. We need to wait for it to happen, right? It could still get rejected. It still has a little bit of supply here. So other than that, there's nothing more to really do. Our chart looks like it's ready to confirm the previous hour candle high. And again, even if you look at the 1 hour chart, all this mess and confusion is below us. So if all this mess and confusion is below us, what is that kind of telling you? A lot of support below, right, guys? A lot of support below until we lose 23,400. So all these pullbacks should be getting bought up. And if you kind of look at it for the last 2 or 3 days, when we were working our way back up through supply, right? These pullbacks, once we got oversupplied, they started to get bought up, right? Every pullback getting bought up, every pullback getting bought up, every pullback getting bought up, right? So for the last 2.5 days, every pullback is getting bought up. So if we continue to put in a high here and we pull back, it's not something to get scared about. It's something to wait for the pullback to get bought up until we get below 23,400. If you don't understand that, you're trying to do too much. You're trying to do too much, guys. So that's why I say patience. Wait for some of this stuff to play out. Have a clear head when you're taking a trade, have clear risk, and just accept the fact that the outcome is out of your control. Your job is done prior to you clicking the button. Okay? The outcome is beyond your control. Live with it. Live with it. If you don't want to live with it, then, and you can't accept it, I will say this, not everyone can be a day trader, but it doesn't mean that you can't be involved in the market. Some people swing trade, some people are investors, some people are passive income investors. Like I have a whole I've got something really good coming out for myself in 2026. I've been building this portfolio, passive income, high yield ETFs mixed with anchors and mixed with, specific things that are tied to the indexes, and then followed with some hedges, some leaps that are 6 months out, 12 months out, and kind of just self-sustaining kind of portfolio where I'm looking to make 2 to 4% on the portfolio a month, right? Which is doable, is very doable if you set up a portfolio right. Maybe some people are just more meant for that. Like, I like to trade, it provides that fast cash income. I will never stop day trading. That's day trading got me to where I'm at. But again, you also want to build some stability along the way. And I was never a person to really hold anything long term anyways, but stocks, like I don't want to be tied to individual stocks long term, because as we know, stocks can go down, they can never come back up, and stocks always go down a lot more than the indexes in a bear market. So think about it. In a bear market, you get, or even a correction, you get a 15%, 20%, 25% correction in the overall market, but you can have a stock down 40, 50, 60%. Like I don't want to ever be down 60% of my position. It's just absolutely crazy. So I always want to be anchored down to the indexes. But I mean, again, there's ways where people can make passive income, like as if you're trading, and you never have to day trade a day in your life. Right now, it's going to take a little bit of cash, but you can get started with any dollar amount. You can get started with any dollar amount as long as you just keep making some monthly contributions. I mean, again, some people with, I'm not speaking about you guys, but just from looking at social media, some people with the amount of money in between resets and evaluations and blown activation fees, some people should be just investing into the markets and not day trading at all. I mean, Jesus Christ, I've seen people that have said they spend $1,000, $2,000, $3,000 a month on activation fees and all this stuff. Guys, like you can put that into an investment account that could start to generate you passive income like crazy over the course of a few months, and try to get this day trading stuff, right? So again, that's neither here nor there. I'll talk to specific people who are into investments. Whatever, you guys can hit me up on the side. But yeah, anyway, so when you look at the overall charts and you start to assess, what do you do good and what do you do bad, right? Like I'm really good at kind of just waiting for my trade. Like if I don't like the trade, I don't really give a shit. Like there's been mornings where I've seen, some people, they're posting gains up early, and I'm kind of sitting back. Well, it's like, well, shit, I didn't catch the trade. I see the trade, I didn't catch it, but that's okay, because I play my game, right? You have to play your game. You can't try to trade everyone else's game and trade everyone else's setups, and you're not, because everyone's unique. We have our own thought processes. We have our own brain. We have our own eyes. Like we see things differently. Our risk tolerances are different. No one is the same. If it was that easy to where I can give a cookie cutter example, then all of you guys would be trading less than 5 micros. All of you guys would be trading 2 or 3 setups. All of you guys would be walking away if you made over $200. But again, it's easier said than done, right? You get into the live markets and everything goes out the window. But that's the benefit of the community. You guys can kind of see things like you guys, me and Burks work together a lot. You guys can see what Burks does, with those $200 days and just kind of stacking them up, getting that mindset and process in order is really good. And again, he'll tell you himself, it's not like something that came overnight, right? There's been a lot of blown funded accounts along the way. And it's, again, those of you guys who are still blowing accounts, guys, this prop, you're gonna blow accounts. You have teeny weeny drawdown here, and you have trailing it with some firms. Like you're gonna blow accounts, guys. The investment is very minuscule. It's not like you're taking $10,000 of your own personal money and blowing it, right? And that's a different problem. You guys are into these accounts, couple $100, and you lose a handful of them. Okay. So what can we learn from blowing those accounts? Like, what did we learn from that batch? Great. I'm not going to do that on the next batch. Now, to say, well, I just lost a trade and, I don't know. Well, no. If you lost a trade and you blew your accounts in one trade, there was a problem. There was a risk management problem in terms of sizing. You were way too sized because no one trade should ever blow your account, right? No one day should ever blow your account. If it is, the problem is revenge, emotions, tilt, whatever. Okay, what are we going to do to fix that, guys? Again, only you, what is this? Only you can change those things, right? Like no one else can change those things for you other than you, and you got to want to change, right? You have to want to change. It starts with you at the end of the day. Suck it up, right? Keep your head up. This is trading, we're not, thank God none of us are doing heart surgery, right? Brain surgery on someone. Could you imagine if we messed that up? I mean, we're dealing with people's lives in that point. Guys, we're dealing with prop firms. Like let's be honest, right? We're dealing with paper money here until you actually get paid out, right? Unless you're trading a personal account. But we're not doing rocket science here, guys. We're not launching missiles into the sky where things need to be precise. So relax. It's not the end of the world. It's only the end of the world when you allow it to be the end of your world, right? Like again, nobody should be invested more than they can afford. It goes for, whether you're a long-term investor, a day trader on personal accounts or prop firms, nobody should be forking out money if they can't afford it, right? I don't care how bad you want to do this. I don't care about that one payout. If it's going to allow you to be financially free and that's the end of the world, it's probably not with one payout. So don't fork out more cash than you like. It's got to be like a no sweat thing, guys. And here's the big thing that I've learned over the years. When you're holding the money very, very tight, you don't want to let it go, right? Which is natural. But if you're holding on to it so tight, you care so much about each possible outcome, right? When you don't care so much about the outcome because you're not over invested, right? It's not going to financially strain you. You trade a little bit more loosely. If you have other cash coming in through a 9 to 5, through investments, through whatever, you're not that like emotionally stressed about a bad trading day with a particular prop firm. You kind of just, okay, what the hell did I do wrong? I was an idiot this day. Let's not be an idiot tomorrow. And we continue to go on with it. So that's another thing. Make sure we're not in over our heads here, guys. Again, I will say this: if you guys are spending over $1,000 a month on prop firms, I got a better way for you. You're not going to make crazy amount of money, but like I'd rather you go invest $1,000 into a portfolio for yourself where you can generate some cash flow, right? Like where you're not going to get hurt every month, and at least on a month by month basis the income will grow versus like you're just not getting anything in return. If you're investing more than $1,000 a month, here's the key word: you're not getting paid out, right? There's a difference. Like I think with my prop firm business, I'm about like $600, $700, $800, $900. Sometimes it's $1,500 each and every single month, but I'm getting payouts. There's a big difference. Like, you take out $8,200 and you put $1,000 in. Well, that's a $7,000 net profit. That's a flywheel that's working for itself. Like, the more investment you make, the more money you're gonna make. But if you're putting in $1,000 a month and you're not seeing anything out of that, and you're doing that month over month over month over month, there's a better way out there for you guys. That's gonna be a lot less stressful. I'll just tell you that much right now. We'll just leave that at that. I hope nobody is doing that, but again, the gambler mentality can come out in people. I've seen people do some crazy stuff when it comes to gambling, right? We don't want to be chasing losses that bad. And all in all, why do I have this ad on Discord for the Conjuring Quest? What the hell is this? It keeps popping up. What the hell is this? Start video quest. The fuck is that? Anyways, So, and even if you are getting paid out, you guys should be building a portfolio for yourself. You know, you really should. You really should, because you always have to kind of think about. You always kind of have to think about the long term thing here. Like, we obviously want to be growing, and by building a portfolio, you're also growing your account. You're growing your net worth. You're growing your monthly income. Like, you know, it's all about multiple streams of income, guys. Make your money work for you. I am in, when I put on my tinfoil hat, I am a firm believer that in the next 10 to 15 years, between AI and trading and investing, that probably a lot of like the non-labor intensive physical jobs will be eliminated by AI, and just, or one person running multiple things through AI. That the majority of people are going to be rotating money through investments slash trading slash dividends slash distributions slash through electronically, this thing that we have here. Like, that's where most people are going to be making their money. It's going to be such a peer-to-peer style way to make money, where realistically you're kind of just taking money and it's going in like a circle loop, right? Like, that's how I think about it. I don't really think like your normal your normal even like for banking, like, but anyways, that's for another day. Pulling back here, hourly chart right into this rising 5 SMA and 200 SMA support. So this is a good break and retest of this supply that we confirmed a couple hours ago. Good pullback spot here. Could pull all the way down to 500. I'd like to see what it does in this area. Again, if you are looking for the bounces, this zone in here is going to be your way to try to find that opportunity to go long. And again, yeah, Charlie, it definitely should be your plan. Should be everyone's plan. I was talking to Burks about it as well, with some of those bigger payouts that he got, about getting some things in line. But yeah, I mean, definitely. And Charlie, it should not be, other than a few outliers that comes later in the process, it should not be tied to a lot of individual names. The individual names is just mainly for growth over time, but the portfolio build is definitely index based first through various ETFs, and then like high yielding ETFs second, and then individual names for long term growth through capital gains. A lot of people do it the reverse opposite, right? A lot of people go the reverse opposite, where they take, okay, I like Tesla, I like Nvidia, Amazon, I like Costco, I like, whatever, right? John Deere. They start putting together this portfolio, and then it's like in a down market, some of these names are down 30-40%, and their NAV, right, their net asset value is way down, and then they're like kind of scrambling. They don't have any cash to kind of buy the dip, and then they're kind of just stuck in these positions for 6 months, 9 months, and it's like they're not making any money on it. There's a way where you can get paid every single month while growing and compounding that, and then setting yourself up on the back burner for those downturns to not only beat the S&P 500, beat the overall indexes as well. But yeah, ETA based. Yep. So just chopping around here still. Just chopping around here. Oh yeah. Yeah, you'll get it. You'll get it. I mean, you know how to trade. It's just fixing a few minor things. And again, you know, with the prop firm stuff, it's not even like you don't even need to be like a super highly consistent trader that every single day you never lose, every single month you never lose. Like realistically, like when you think about it, like you can just catch the market in a hot 2 week stretch and get a payout, right? And like if you had 10 accounts tied to that and you get a payout 2,000 times 10 accounts, I mean, geez, that's $20,000 right then and there, which kind of sets you up and allows you to breathe a little bit more freely to invest more money back into it and then kind of take some of that money and start, building something on the side. But like it's not like a lot of people get stuck in this world. It's like they have 5 days, 10 days of really good trading, and then one day they just give it all back. When realistically, it's like it's you're gonna run into those one day every week, one day every couple weeks where it's just bad. It's just bad trading. It's like bad price action, bad setups, emotional like lock, like you lost it emotionally one day. That's gonna happen, but we can't let it derail 10 days, right? Like again, like let it derail us for one day and then we come back and we put up another 5 days. And guess what? During that time, 3 weeks have passed. You had 2 bad days, quote unquote, that you kept under control. You had another 10 days on top of that, and there you are getting your payout, right? So you don't have to, it's not like you have to be perfect. You don't have to be perfect. What time is it here? 9:30. All right, guys, I'm gonna wrap this up. I did record this. I'll just upload it. I just wanted to kind of pop in here and see how you guys are doing and kind of mark out some of these levels. I do have a one-on-one call with someone from mentorship, so I have to get on that call. But hope you guys all have a fantastic trading day. Again, guys, if you are going to continue to trade and it's still in your window, just kind of wait until maybe after lunch. What you're kind of looking for is on this pullback, do we pull back and then find the bounce opportunity here off this support, and can we take out 23,555? That's pretty much it. And to the downside, I mean, there's just so much support stacking to the downside here. It's going to be very difficult to try to get in there and scalp those shorts. If not, just wait and come back tomorrow, because again, when you go back to the daily time frame, we are kind of setting up here. We're about 2 or 3 days away, maybe one, but I would say 2 or 3 days away from really being able to put on some good longs and make some good cash. And again, one day can kind of set up your whole week, so we really don't need to be too anxious for that. So with that being said, I'm gonna hop off here. Hope you guys all have a great rest of the day. I'll kind of post some updates on a couple of the trades that I took in terms of what the risk management was, and I'll post that a little bit later today, and I'll catch you guys all in the room tomorrow.